Hello and welcome to Financial Intelligence. In this video, I want to show you my template for analyzing rental real estate investment deals. This is an Excel spreadsheet model that takes the basic information about the property and some baseline assumptions and estimates the monthly cash flow and returns. Most of the cells in this spreadsheet are actually formulas, so you can easily update the spreadsheet and compare different properties. I'm going to add the link to this file in the description box below so that you can download it. If you like the type of content that I provide, subscribe to this channel and give this video a thumbs up, and also hit the notification bell so that you won't miss any of my future videos. I'm going to switch over to my laptop screen so that I can show you the spreadsheet. Here is the spreadsheet that I have created. It has three segments. On the right hand side, I have highlighted in green all the assumptions that are used, such as the interest rate, down payment amount, and maintenance costs. The left hand side column contains the revenue and cost numbers. The yellow cells are the input numbers entered manually, and the rest of the cells are calculated automatically based on the input values and the assumptions from the right hand side column. The middle column shows the results of the analysis, which are all calculated automatically. Let's go over the left hand side column first. Cell B2 is the final purchase price of the property after negotiations, and cell B3 shows the initial cost of fixing the property if applicable. In this case, the purchase price is $280,000 and there are no rehab costs. The next section calculates the gross income, which is the rental income before taking into account costs. Cell B5 is the monthly income value, in this case $3,000 per month, which is entered manually. Cell B6 is the cost associated with vacancy days, because the property is not going to be rented out 100% of the time. This cell is a formula, and here a 10% vacancy rate is assumed, as shown on the right hand side column. Cell B7 is for other types of possible income, such as coin operated laundry, which is 0 in this example. Moving down to the cost section on the left hand side, we have property taxes in cell B11, which is entered manually. Similarly, you have the cost of insurance that is again entered manually in cell B12. The next two cells are formulas that calculate costs associated with maintaining the property. Both are assumed to be 5% of the annual rental income. Maintenance budget is money spent in order to upkeep the property. The capex budget is the expenditures used to improve the property beyond common repairs and maintenance, such as getting a new roof, major appliances. The maintenance costs and capital expenditures can vary significantly depending on the age of the property and the location/weather conditions. The rates used here are some typical numbers but are not set in stone. The next cost item is the landlord paid utilities, which is entered manually in cell B15. Many lease contracts include certain utilities to be paid by the landlord. It's important to know which utilities are going to be on you as the new owner so that you can take them into account when calculating the returns. Cell B16 is the property management fees if you are planning to hire a third-party person or company to manage the property for you. Here, the property management fee is assumed to be 8% of total rental income. The last row on the left-hand side column shows the total annual expenses. The middle column has the results of the analysis, which are based on the revenue and expense data from the left hand side and some assumptions from the right hand side column. Cell E2 shows the loan amount required, assuming a 25% down payment shown in cell E3. Cell E4 shows the initial rehab cost associated with the property, which is 0 in this example. Finally, cell E5 shows the total amount of cash needed for this investment, which is equal to cell E3 plus E4. Next, we have the total gross operating income, which is the annualized value of the gross monthly income from the left-hand side column. Note that this value takes into account the vacancy rate. Cell E8 is the total annualized expenses. Cell E9 is the annual net operating income, which is the annual gross income shown in cell E7 minus annual expenses shown in cell E8. Cell E10 shows the annual amount of loan payments based on the down payment percentage and interest rates specified on the right-hand side column. In this case, the annual amount of loan payments is $12,000. Cell E12 shows the annualized cash flow value, which is net operating income shown in cell E7 minus annual loan payments shown in cell E10. If you divide that number by 12, you will get the monthly cash flow shown in cell E17. Moving down the list, cell 13 shows that roughly 3.7K of the total $12,000 loan payment is going toward reducing the principal of the loan in the first year. The rest of the loan payment is essentially interest charged on the loan in the first year. Cell E4 shows an estimate of capital appreciation of the property in the first year, assuming an annual appreciation rate of 4%, which is specified on the right-hand side column. The final results are captured in E16 and E17. Cell E16 shows the cap rate, which is equal to the annual net operating income from cell E9 divided by the purchase price of the property from cell B2. Cell E17 shows cash on cash return, which is equal to the total gains in the first year, including capital appreciation, divided by the cash investment. Based on this analysis, the property has a cap rate of roughly 7%. This template can be used to analyze different properties and to compare their cap rates. Note that the results are very sensitive to the assumptions you make. It is wise to analyze aggressive baseline / conservative scenarios to get a more realistic perspective of the actual returns. I hope that you liked this video. If you have any recommendation or suggestion, please add them in the comment section below. Don't forget to like this video and subscribe to this channel, and also hit the notification bell so that you won't miss any of my future videos. Thank you and take care.